Hi there traders, and welcome to the daily recap show for the first session, the first US session of 2023. Happy New Year. I hope you're fully refreshed, recharged and raring to go after the holiday break and are ready to take advantage of the opportunities that are coming in 2023. So with that being said, this is one of the last opportunities to take advantage of the free sign up to our Keyzone service. The link is below in our YouTube channel in the box below. This will be becoming a subscription based service in the next couple of weeks. So if you find these reports useful, if you find these recaps useful and they add value to your trading, please let me know in the box below. Please come sign up. It's completely free and you'll get special access launch offers and stuff when we actually go live with the subscription service. This is starting with the S&P for yesterday's session in the US. These were the zones of reference. We spoke about the range being developed over the holiday period and it being tricky on the first trading day of the new year, tricky trading conditions. We said that aggressive support was at 38.40 to 38.38, although that was in the middle of the range, so it was high risk. Better support was down at 37.99 to 38.07. So let's go and have a look at the S&P yesterday. Okay, so you can see the market opened up around here, just above that aggressive support zone. We did have a little push up, but then we got an impulsive push through that zone. So that aggressive support didn't offer anything. It didn't show any sign of support either there. So we pushed straight through. We came back. This unfortunately just missed the retest. I think if this had pulled up and actually connected with this area here, that would have been a nice breakdown retest, and we would have had an opportunity to get short. However, that didn't materialise. So nothing to do there. We then came down, and as you can see, this 37.99 to 38.07 zone did provide support. We did have a signal here which may have been able to get risk-free, so that's a potential opportunity there. I think you probably would have just got about one-to-one target on that, so you would have had a good opportunity to make that risk-free. I think you would have been well within your rights to see to try and see a higher target, at least into this zone here, maybe even back up into this zone. However, we didn't quite get that, and any sort of risk management probably would have been stopped out for a break-even trade. We then came down, just took out that liquidity, and then pushed higher again, suggesting this bit here was a false break. You see, no full acceptance below the zone, so we didn't break the zone as such. So that wasn't. We were still looking when we had this false break and we push up. We could have looked for further buys. We had the retest here. This buy signal did work. And that pushed up. This one's okay to take. I would have preferred it to have taken out some liquidity first. It doesn't do that. It does take out this liquidity, but having already taken that out in this move here, we didn't then take out that new liquidity. So I would not have necessarily taken this one either. So not really too much to do on the S&P yesterday. I would have really liked this trade here if this had just pulled back a little bit more. Other than that, this is probably the best trade, and like I say, you probably would have just about got risk-free and then stopped out for a break-even trade. So that's the S&P. Now let's go and take a look at the Dow. Okay, so these were the zones of reference on the Dow Jones. We spoke again about the markets developing a range over the holiday period and the first trading day of the month, first trading day of the year, often providing tricky trading conditions. So we said that we were in a chop zone at the moment, and we said the main support for the range was at 32.825 to 32.875. So let's go and have a look at the Dow yesterday. Okay, so the market opened here, and you can see that we didn't really reference any of these zones in the report to actually trade from because we were in that chop zone. You can see they're all quite bunched together, which made it just very tricky to look for trade locations from there. You could have got some very choppy price action, but we did reference the support range at 32.825 to 32.875, and you can see that has held quite nicely here. Not the best reversal here. If you had managed to get a reversal, then that would have been definitely very valid. Wasn't a good enough reversal for me to take. And this one here, if this very close to being a perfect reversal. This one just didn't quite take out that liquidity. If we'd just taken out that liquidity and then reversed, that would have been a really, really nice trade. So unfortunately for me, the zone worked really well, but there wasn't really much for me to do there on the Dow. But if you had managed to get a reversal, certainly from this initial one, then that would have been a nice trade. Like I say, this second one, I would have preferred to it just taken out the liquidity before then the pushing on, but the actual reversal pattern was much nicer. Just didn't quite take out that liquidity. But that zone worked really well on the Dow, and whether if you'd managed to get one from here or from here, both moved up into that next zone, that next minor zone of resistance that you could have managed to trade from. There is actually, on the way down, there is a couple of breakdown retests. So you broke down from this zone, retested it here for a short, and then again breakdown of this zone, retested it here for a short. They both have their merits in terms of the price action on the on this chart. You can see we've got impulsive, corrective, so the retest there, impulsive, corrective, retest there. So they do have their merits as well, but it wasn't something that I was looking to trade yesterday just because we was in that bit of a chop zone. But if you had managed to get those, I don't mind those trades at all. But like I say, just if you're going to take those sorts of trades, you have to be very careful, especially when you're in a chop zone, because they don't really lend themselves very well to momentum trades like these. So that's the S&P and the Dow. As I say, I hope you find these reports useful. Please let me know how you're getting on with them. Please comment and tell me if they're adding value to your trading. And if they are, please come sign up for the Keyzone service. As I said, it's completely free at the moment, but it will be becoming a subscription-based service in the next couple of weeks. So I hope you had it again. Once again, I'd like to wish you a happy new year. All the best for 2023, and I'll speak to you soon. Cheers.